Stock market is on a rebound. So are commodities still in play? Stay tuned. All right, now welcome. I know last week we were talking about the money and actual cash flow starting to move from equities to commodities. Well, just because the stock market has rebounded, wait till you see the data that we want to get into today. So stay tuned. And I do want to remind for anyone, if you're new, welcome to the Wealth Transfer. My name is Terry Saka. I am an accredited asset management specialist. I did come from the financial world, getting my Series 7 which is your financial advisory license through A.G. Edwards, as well as a 63, 65. I also carried a Series 3, which got me into the commodities, the futures, all that kind of stuff. So at least I have a really good grasp of the rigging that's taking place. And I learned real quick back in the day when the market started coming down in 2007, we could see the writing. And we really transitioned out of the paper world into tangible assets. And God has blessed us immensely with relationships. We are now tied into some of the finest in the industry with Republic Refineries and Loomis Vault Systems. And it's just been a wonderful journey. But just know that we are here at the Wealth Transfer because wealth transfer is, if we go biblically anyway, the transfer of the wealth from the wicked to the innocent. And we want very much so that the kingdom gets this principle because it's not about your quarterly ROI, your annual return. What's your profit today? This is not what it's about, folks. This is about the long term of the growth of your buying power in the paper that you're holding. And you got to keep that in mind because at the end of the day, what do we have besides, and I usually have a dollar bill here, what do we have in that paper dollar besides anything more than just buying power? What does it buy us? And if you've noticed, without them telling us, gas is, of course, back over $3 a gallon. Everything else we're dealing with, goods and services, for the most part, are just more money. Our dollar is not going nearly as far as it did 10 years ago, 8 years ago. And this is the whole point here. For those that have really been along for this ride, paying attention since the 2008 absolute collapse, which they call a Great Recession, but we all know it was a lot worse than that. We have precipitated into $150 trillion of newly created debt since 2008 and $15 trillion and newly created printed fake fiat currency notes globally. So, of course, we were going to eventually have a market boom. But, folks, is the stock market really booming? This is what we want to get into. So I want to dive into a litany of real visual graphic charts of money flow. Commodities, as you can see behind me, I'm feeling pretty good. That looks like we're going back in cycle. It has been about 7 years since we've seen this kind of money flow setup. And this is really important to understand because all the money has been driving into these equities, and the cash that was on the sidelines, which we would call, well, I won't get into that, but the cash they put on the sidelines, people that have been holding cash in concern, corporations holding cash in concern of what was coming. We started to see cash go in to the point where 2 weeks ago, the TD Ameritrade CEO came out and said that cash is all gone on the sidelines. Everybody is in. But folks, they're not just in, they're margined. So we're all into the market. We have explosive, expansive credit, and we're margined. Now, when you see the data that I'm going to set up here over the next 20 minutes to help you understand where we are at the precipice of the stock market run, versus the commodity sector and where it's been, and I guess you could say getting beat up for quite some time. Let's just kind of go in and kind of illustrate that. But just understand that it's all about money flow. If commodities are running, typically the money's coming out of the equities. And in this time around, we have a feeling it's going to come out more than just 10%. So do know what you saw last week or so when it dropped about 10% in the stock market, that was nothing. I know that was a setup. That was a manipulated stock market crash. And it was done through the VIX. That 10% was fast and furious, not as a pun, of course, on the, you know what I'm talking about. That is important to understand because the system itself has been manipulating us for quite some time. I don't know if that was a message to the president. I don't know if it was the outgoing Janet Yellen, incoming Fed Chairman Powell, but it was a setup manipulated, and even a whistleblower had come out and given some details. But no, that 10%, folks, that was fast, wasn't it? And I don't know if many of you paid attention in your account. Maybe you didn't want to. But we have seen a lot of inquiries. We've had people that have been in the markets a little more concerned, saying, you know, this is definitely not looking right. But what I would say, if they can do that 10% that fast, can you imagine when the real crisis hits, when the derivatives really come to roost, where is it going to go? The hot money is going to move. And what we're seeing now in the whole aspect of manipulation is, will they just continue this into infinity? Most Americans really don't care, and I understand. But it is vital for those that are looking for the long term in the future, stability of the buying power of your dollar, your retirement, and your standard of living when you go to retire. I just want you to caution, and for those that are in the markets, congratulations if you've made 30%, 40% on your accounts because you had lost so much in 08. But I want to caution you this way. In 2008, we all know where we were. Just go back to where you were in 2008. How much did your account lose? And how long did it take to come back? That's right. Think about that for a minute. Do you have 5 to 10 years if this market collapses without your ability to get out? Do you have the time to recover? Not to say it even is going to recover to the same tune that this one did some 10 years later. So you have to really be managing money on a balance of diversification so you don't get caught with the markets collapsing and you can't get out. Now, I have a friend, he's a very, very successful financial advisor, an equities trader, and he told me this 10% crash, he couldn't believe how they had trouble getting out of the market. How many equities, stock market companies, brokerage firms on their internet sites go down during the market sell-off. He said, good luck, because you don't have stop losses in the stock market anymore. He said, good luck calling me. He had hundreds of clients. He said, there's no way you would get a hold of me to sell what you needed to sell in time. That's a pretty staggering statement. And he knows, because we talk back and forth about being prepared and diversified. And that's what this is about today. I'm saying we need to take a real strong look at our positions in the equities, start diversifying out into the commodity sector. And I'm not alone saying this, by the way. So I want to get into just the deepest part of the index for commodities to show you where the money is flowing. And I'm just saying merely be diversified. Over these years, it's been nice, I understand. But we are at a point, and you're going to see after this break the data that'll show you it's close enough for the time. So wouldn't you rather have a peace of mind sleeping at night? Take a percentage off the table. We always would say that in the financial advisory world. When trades would look like they were tired, we would just tell people, take 25% off, diversify. Take 50% off as it goes up a little more, diversify. I got a tape cut from Larry Kudlow I can't wait to play that talks about that very thing. Where's money going? And no kidding, his guest said silver. So the greatest thing you could do for yourselves is get an education. A good place to start would be right here. So let me take a quick break.
Terrorism, a volatile stock market, rising food costs, natural disasters. Every day our economy is at risk, but your assets should not be. Cornerstone Asset Metals is here to help you protect and preserve what you have worked so hard to gain. Whether you have IRAs to protect, 401ks to preserve, or cash in the bank, our accredited asset management specialists are here to support you. Call now and we'll send you urgent information regarding changes to the dollar and challenges to our economy that you need to be prepared for. Learn how easy it is to roll over your current IRA or 401k into a physical precious metals IRA. We can even arrange to have your precious metals stored in a private vault or send it directly to your home. Do not delay. Call 888-747-3309 or register online at cornerstoneassetmetals.com today. Invest in precious metals and create security in your future today. Call now.
Welcome back. Okay, so I'm going to dive right into the data. And now I'm going to go back and revisit a chart I showed last week. It's so unbelievable for a visual that I really think you should get this. So let's go in. This is known as basically the commodity index versus the S&P. It's the S&P large cap index, and it shows the valuation and it shows you the years on the bottom. And I just want you to see back in the 99-2000 time frame, right as the stock market, well, interesting 9/11, right? But right as that change took place, look at the low value in the middle there in the red circle where commodities were, but look where it went versus the equities. These were valuations. And then you go to the far right and look at how ready we are for a flow out of the equities back to commodities. And look at how low on the dark brown right corner that is undervalued in commodities. But what's interesting is wait till you see what I'm going to show you from there, because not only is the commodity cycle ready to go, you could say, but it has already started in a way that is kind of underneath the radar. And let me get to show you some of that. Now this one is the ratio, the S&P ratio, equity expense and commodities cheap visual. It's a beautiful visual because it goes back to 1971. Now 1971, we all know what happened. We started a new dollar standard. That's how we got into this fake fiat Federal Reserve note. And if you remember, folks, take the dollar out of your wallet if you happen to be holding one and look at it. Federal Reserve note, it's a slave instrument. It's an IOU. Somebody owns us. The real dollar, Article 1, Section 8, was grains of silver, and that's where we, the people, would have benefited if we've always had been there since 71. Folks, those that had silver from 71 to today, 1,700% increase. That is a sustaining buying power and preservation of wealth for the next generation. And what we see coming in the future for the cycling of silver, it's probably going to be very similar. But then you notice we had the oil crisis, then the Gulf crisis, and then, of course, the big great smash in 2008. The green circles on the bottom denote when the commodities are cheap compared to stocks and equities. Do you notice in 2018, starting here, commodities are the cheapest they've ever been since 1971. That is an absolute trigger for get ready and, if anything, be diversified. And so I want to dive right into the index and keep going with it, because in the index from just 2016 to 2018, look at this one and how it has crept upwards. So it has been the cheapest it's been since really the 71 marker, but since the 2008 collapse, I just showed you in the first one where it was really ready to go. Well, look at this in detail. Now, the index bottomed in February of 2016 at 155. And I know this sounds a little dry, I'm getting a little charty on you, but just stay with it because it's beautiful to see it play out. Then we come up and inflation started accelerating starting in June, summer of 2017, if you've noticed at the bottom of the right side there. The commodity index has been up 20% since 2017, 40% since February 2016. Now, that's just the general index. That's the underlier But if you've noticed since then, just in mid-December alone, we have seen a 10% increase in the commodity index. Folks, there's more to that than you can imagine. It's an underlier, meaning money is already flowing into the commodity cycle and you don't know it. Your advisor is definitely not telling you because most of them really can't engage into commodities. They definitely can't get into the real commodity. They might be able to play with an ETF, but it's not the point. With what's coming, you want the real thing. Because money flow is money flow, but we really believe with what data is showing, with the aggression of China and Russia and others over in the East, that this next time round, this isn't a 10% correction, folks. I will not be surprised to see a 50, 60% correction. And I'll go as far as to say, before I'm raptured or I'm done doing this, we are going to see the Dow Jones and gold equal in value. And I don't know what that price is going to be, where the Dow's going to, or where the gold is rising to. Of course, silver would be exponential in that factor. I won't be surprised to see a 1,000% move in silver when that cycle does that. I'm not alone in this. It's a 200-year Dow and gold chart and ratio. Stunning. It's on our website. I do know it's on the material that Cornerstone sends out. So for getting educated, that would be the place to start. But let's go here. Now, as we talk about money flow, the bonds have something to do with this because remember, I said that we have since 2008 added 150 trillion in debt globally. That's a staggering number, folks. You can't even visualize it if you wanted to. But notice here in March, where the 10-year Treasury was at 2.6, then it kind of floated back down, and the 10-year yield is now likely, as they say here, to go above the 60% as in 1981. Now that's a chart figure, but let me tell you something. We can't have it that high. We can't have interest rates that high. So I don't really see where the correlation goes because interest rates rising, as they say they are going to do, we add 50 billion for every quarter point of interest they raise to the payment on the interest on our debt. So we can't sustain that. And with tax cuts, infrastructure spending, and everything else that's coming, if they pull that off, we're looking at an explosive devaluation of the dollar. And I won't be surprised to see the dollar in probably the 40 or 50 handle. And I know many people don't believe that, but we'll wait and see the next 5 to 10 years how that plays out. But the yield on the 10-year has gone in this chart to a skyrocketing 2.65%, which ties in March. And folks, it's actually higher. It has now reached just below that 3% yield. And of course, they came in and the plunge protection team and manipulated it down. But not only is the 10-year on the verge of actually breaking out of the 3, and when it does, it's telling the world where our debt levels are. So you got to keep that in mind. But not only is the 10-year ready to break out of 3%, the dollar is ready to go below the 88.50 on the index, which puts it into a bear rush rate to 80. And I contend, folks, the dollar's going a lot lower than that. I know the policies being put in place right now by the president. I know he's trying. He's fighting both sides of the fence here, it seems like. But they're productive. It's excellent information. People are receiving more money. Jobs are coming back. Problem is, folks, this tsunami was way before Trump. And as you know how a tsunami works, I don't care what you put up on the shoreline. That wave of water's taking it out. And we're going to see that happen here as well. So I just want you to know that as the data starts laying out that the indexes are showing that it's time. We don't know exactly when, but we know it's soon enough. So the important thing is just be prepared and diversified and protected outside the system. Don't be all in. And I know what your advisors are trying to say because they're not allowed to let money leave the house, folks. They're just not. 25%, 50%, take off the table, go into these commodities at such a low price point, and you will protect your account with a policy of insurance, but beyond insurance, because wait until you see the projections on where they're going. So I have to take a quick break. We'll be right back.
Terrorism, a volatile stock market, rising food costs, natural disasters. Every day our economy is at risk, but your assets should not be. Cornerstone Asset Metals is here to help you protect and preserve what you have worked so hard to gain. Whether you have IRAs to protect, 401ks to preserve, or cash in the bank, our accredited asset management specialists are here to support you. Call now and we'll send you urgent information regarding changes to the dollar and challenges to our economy that you need to be prepared for. Learn how easy it is to roll over your current IRA or 401k into a physical precious metals IRA. We can even arrange to have your precious metals stored in a private vault or send it directly to your home. Do not delay. Call 888-747-3309 or register online at cornerstoneassetmetals.com today. Invest in precious metals and create security in your future today. Call now.
So I want to go right into the dollar index. The dollar is a very key component here, of course, and we have talked exhaustively over the last year and a half at the Wealth Transfer Program. We have talked about the dollar actual reserve status being taken out and the Chinese rising. Of course, this is happening. The Chinese yuan is replacing the dollar in financial transactions. Of course, they have replaced us and as the world's largest trading nation. They are setting up yuan currency hubs. They are now an official reserve currency in the IMF. So folks, Cornerstone has a great package set up for things that are happening, nails in the coffin to the dollar. Goes back a few years showing. And what's interesting about it is it's a few years old, and it's nice because you see where that projection was and all the things that came true, and we can only begin to tell you where it's going. The Chinese are systematically getting ready to challenge the hegemony of the United States. You're starting to see the push, and just the other day, I saw a commanding general, I believe it was, speaking, and he said that the Belt and the Silk Road that the Chinese have built is a national security interest. Folks, we have had it on the TV program for a year and a half, outlining in detail about this Chinese expansion with the Silk Road, which is basically, for those who don't know, a building of economic superpower with roads, rails, and shipping lanes. They're buying ports. So not only are they the world's largest trading nation, they now own the trading routes. And now we got a commander saying that it's a national security. I didn't expect President Hussein Obama to get that because I think his goal was to take us down, not build us up. But we knew this a couple years ago, almost 4 years ago, that this was being built, and yet now we have commander saying it's an actual national security risk. Amazing to me. So here is an image of the dollar index from 1997 to 2018 current today. Back in 2011, when we really had the peak, the dollar index topped at 104. Well, forget that part. Let me just come up to 2016. The dollar index topped at 104 just recently here, right after Trump was elected. And so far since, it has dropped 14%. Let's go into a comparison. I want to show you in the bonds. The bond bull market really is over. So for folks that are in the bonds, you have to understand this is taking place. Look on this chart here on the left side that shows from 1988 to where we are today at 2018. We have completely bottomed out on the yield. And that's important because the yield is what the retired people lived off of. So for all of you that are in your 70s and 80s, and those of you in your 60s going to, we normally were trained as an advisor to put you in bonds to your age. So if you're 70 years old, you'd have to be in bonds for 70% of your portfolio. Well, back in the day, we would get a yield, especially in the 80s. We were 9% yield, so it was an income from just holding the bonds. Well, today, you'll be lucky to capture a couple percentage points. And folks, the dollar devaluation and debasement is far more than those couple percentage points. So as you can see on the chart on the left, it has bottomed out at near the 1 to 2% range on the yield. And folks, it just basically means holding our debt is worthless. And don't think the world isn't taking notice. And on the right side, you can see where the cycle literally has come all the way back up to 2000 levels where the stock bond ratio hits. So it's something that we have to kind of be cognizant of, because these charts are self-explanatory. Now, it could be a month, 2 months, 3 months, 5 months. We don't know exactly. It could be tomorrow. That 10% was fast in the stock market sell-off. If anything, take the 25% off the table now and start rolling it over into a physical precious metals IRA for your protection. And then take 50% off later on if you choose to. We have people right now, some of them just now going into the market. FYI, training 100 years of A.G. Edwards worth, you don't go into the market right now. That's what they tell you in the training. That's when the pros are selling to you as you're coming in. So if you're starting to go into the markets right now, it's a tragic mistake. Who's paying attention? This chart here is the Silk Road gold demand. Since the 90s, really in 9/11, if you've noticed Silk Road being India, Turkey, Russia, and Chinese reserves, they didn't have much gold. Since 9/11, these four nations alone, which are the dominant control factors of just about 2/3 of the global economy, have accumulated 35,000 tons of gold. I've tried to tell people over these years that the Chinese have been taking a tremendous amount of Western gold. And without showing you the chart, but I will show you that next time, the actual COMEX in Chicago that houses our gold and silver physical for the actual futures market, just about empty. Where's our gold and silver? Going to the Silk Road. See? They know, they're preparing, they're preserving their futures buying power. Why aren't we? So folks, if the rest of the world is preparing, why are we not preparing? If the rest of the world wants this protection against the dollar, why do we, the people, not want that? So I encourage you to stay educated. Go visit Cornerstone. Visit Cornerstone on the Facebook page. We are still doing the widow's mite. We are so thankful that we want to announce to any one of our likers. Go like us at Cornerstone there, or wealthtransferministries.org. Go like us on Facebook, and we'll give you a widow's mite because you placed a little in the master's hand, and a lot can come.